In this tutorial, we'll learn how to set up a loan in Cindy. We are logged into Sample Financial Company, which is basically a mortgage company, and all the loans are mortgages. But you can use Cindy for any type of loans. So let's go to the loans screen and see how to set up a new loan. Click on Loans and Properties on the main menu, and then click on Loans to display the loan setup screen. Every loan in Cindy has a unique loan ID. It depends on you what you choose for loan ID. It should have 16 or less alphanumeric or numeric characters. You can also let Cindy choose the loan ID for a new loan according to a preset convention. Please go through the tutorial on loan ID segments. For Sample Financial Company, the choice of loan ID is left to the user. We will call this loan Test. Every loan must have a template which determines how accounting transactions related to a loan will flow into the journal ledger. Please go through the tutorial on templates to learn how to set up a template. Cindy has already entered the template called Loans. Since this template has been named as the default template, you can change it if necessary. Now you can set up a new borrower or choose one of the borrowers already in the database. In this case, we will choose an existing borrower. Let us choose Samuel Sampson or SamSam. We will call this loan Mortgage for Samuel Sampson. Suppose it is for $100,000. The mortgage is starting on the 12th of July 2015. The interest rate for the loan is fixed at 5% per annum. You may also have loans in which the interest rate is tied to the prime rate set by the central bank. The tutorial on prime rates will teach you how to change the prime rate. In this case, the prime rate is 4%, which was set on 30th of June 2015. The interest rate may be set up as prime plus or minus a factor. For example, prime plus 0.5 or prime minus 0.5, which will mean effective rate of 3.5%. The term of the mortgage is 5 years or 60 months. Notice that the in-process box is checked, which means that this loan is still in the process of being set up and is not ready to be billed yet. Then we go to the Terms tab, and here we enter the rank. Now, rank is a user-defined field, and you may use it the way you want. Sample Financial Company has defined it as 1 for first mortgage, 2 for second mortgage, and 3 for third mortgage. You may set up different codes. For example, car loans, home loans, computer loans, or whatever. Billing day is the day of the month on which the interest is calculated. This company performs all interest calculations on the last day of the month. So we put 31 in billing day field. The payment type of this loan is blended, which means that you amortize it and recover a portion of the principal every month. Cindy has calculated the monthly payment of $1,887.12. We will discuss the payment type in detail a bit later in this tutorial. If the borrower pays the loan back earlier, then you may charge additional interest for a specified number of months as penalty. Billing frequency is the frequency with which interest is calculated. In most cases, it is monthly, but it could be daily, weekly, bi-weekly, etc. We are not compounding interest for test. If we set billing and compounding frequencies as monthly, then interest is calculated on unpaid interest from previous month's billing. Cindy uses 5 interest calculation methods. In order to understand these methods, let us calculate interest on $100,000 at 5% per annum from February 1, 2016 to March 1, 2016. In case of 360-day year, the annual interest is divided by 360 to get daily interest, which is multiplied by the number of days between the two dates. For 365-day year, the daily interest is obtained by dividing annual interest by 365 days. For exact year method, it is divided by 366 if the end of February lies between the dates and it is leap February. For 12-month year, if the difference between two dates is exactly 1 month, the interest is obtained by dividing annual interest by 12. If it is partial month, then Cindy uses 365-day year. For most loans, we use 12-month year. As you can see, the interest amount for each method is slightly different. If the payment type is blended, the amortization period in years is calculated by subtracting start date of the loan from maturity date. The maturity date, in turn, is calculated by adding the term of the loan to start date. Expected repayment date is just for information and does not enter any calculation. The next billing date is calculated in accordance with the billing day. This loan started on July 7th, and the billing day is 31. The next billing date will therefore be on July 31st. Let us now come back to payment type. As I mentioned earlier, the payment type of this loan is blended. Cindy will generate an amortization schedule for the loan. Notice that in the first month, it does not recover any principal since it is a partial month. Starting the second month, the principal component of the loan increases and the interest portion decreases until the loan is paid off in 60 months. The payment type could also be interest only, in which case the same interest will be charged every month without any principal component. There could also be a special case of interest-only loan such that the borrower may pay a fixed amount of principal every month. For instance, in case of test, the borrower may pay the principal in equal monthly installments so that each installment will be $100,000 divided by 60 or $1,666.67. The deduction of this additional principal will start with the billing run on July 31st, 2015 and run until the maturity date. In this scenario, you will notice that the interest will go down fast and the installment amount will also be less each month. We will switch to an existing loan, say AVE 1077. In the Notes tab of the Loans screen, there are 4 boxes of unlimited text available for whatever notes you want to enter. In Context tab, you can add all related context such as co-borrowers, guarantors, and lawyers, which have been set up as other parties described in another tutorial. Cindy creates a series of documents which are saved in Cindy Document Library, and you can access them in Documents tab. We have already a document in the library for this loan. You can open it by double-clicking it. It was the invoice created for the month of June 2015. You may add external documents related to a loan by clicking New Doc button and pointing to a file. The file is copied to the library. Finally, OPT Fields tab lists all optional fields set up for the loan. In this case, there are none. Let us get back to our new loan test and see what else we can do to make it ready for billing. We will first of all change our entries back to what we had set them up initially. The payment method is blended and there is no additional deduction of principal. Click Save. Notice that it is still flagged as in process. It will remain so until we fund the loan. So click Funding. By funding, we mean that we write a check to the borrower. And the check number is 21764. Click Process to fund the loan. Notice that the In Process and Stop Billing flags have been removed. This loan is now active and ready for monthly billing. This is it.